and there is no reaction, or I would say there is just numb reaction in the markets per se. Now, I don't think we've reached what really could be called as the final chapter in terms of tariff. The tariff rollout is still an ongoing process, and by the time the final deals are sealed, the picture could alter. So markets perhaps would like to react to the news because it's a moving situation only when there is clarity. Because if it's a moving situation where rates are changing, where opinions are changing, markets would perhaps like to avoid that aspect. But because what holds true today may not hold true tomorrow. So that is what I think markets are waiting for. Rather than betting on something blind, markets would bet on something which is seen, or when the real news or the tariff deals are sealed with individual countries. Second, we need to take cognizance of the fact that the dollar index has perked up. So do we have a bottom in place for the dollar index? Dollar has gone through a very linear kind of a decline, and if there is if we have a trading bottom for dollar, that incrementally could have impact on yields, flows. So are we at the beginning of the short dollar trade unwinding? That is second. Third, global volatility has just got crushed. So news is strong, markets are at a relative high, momentum is not there, and the dollar index seems to be inching higher, or at least seems to be showing signs of bottoming out. So it's a dull market, and in a dull market where you will have to really struggle hard to find pockets of momentum. That is how I would look at the global big picture, that everyone is saying, okay, let's wait for that final tariff picture with individual countries before we assess, because what holds true tomorrow may not hold true tomorrow, what holds today may not hold tomorrow, and what may happen tomorrow may change day after. That's the way things are.
No, absolutely. But Nikunj, one trend is actually clear in the Indian markets, and that is clear consolidation. I'm sure that we will deep dive more into what TCS earnings could mean for the markets, and if IT is on the back foot, then which sector can actually come on the forefront to lend some support. But as of now, how are you catching the sentiment in the market right now? How are the positioning being done as per you? Because it's not just the benchmark indices, even the broader indices are not doing anything.
So, I think we are consolidating, and there's nothing new to add if I say that we've consolidated from last 33 days. You add yesterday, then that makes it 34. I think we'll consolidate today. So by the end of the day, it would be 35 days. So markets are clearly consolidating. Why are markets consolidating? Now, one side there is good news, which is the inflation is coming down, interest rates have come down, monsoon impact I think is visible, and early signs of revival in consumption. So those are factors which are good news. The bad news is that earning trajectory, at least for the coming quarter, is not going to be that great. So markets know that while macro has their role to play and they've taken markets higher, in the near term there is still this overarching fear of tariff and also earning season, which is unlikely to be great. So that in a sense is pushing the market down. I would also like to remind our viewers that we have to notice the FI activity. While the FI activity in the month of May and June was rather heartwarming, last couple of days the FI number is not that it is not breathtaking, so to speak, and DI activity seems to be getting slightly crunched. So from a market standpoint, you may just struggle to find what really could be called as the right direction. My personal view is that the path of least resistance for the market, Shrishti, is lower rather than higher. When I say lower, it's going to drift lower, it's not going to crack lower. Why will it not crack lower? Because of macros. Why will it not drift higher? Because of micro. So a bit of a micro versus macro, where micro is not great, but macro is great. An odd number will react to, an odd stock reaction will be there to numbers, but barring that, I don't think upgrades are coming. I don't think flows are strong. I don't think there is a large change in terms of a trigger which we should expect in the month of July. So, it's like a plane, Shrishti. When the plane goes higher, you need more and more fuel so that it can continue to climb gravity, the law of gravity. Otherwise, gravity will pull it down. So gravity in this case is dollar index. The gravity in this case is what is happening at individual company levels in terms of earnings, and gravity in this case is FI activity, which is threatening to slow down.
Well, indeed, but Nikunj, everybody is literally watching out for that. Will this gravity can also make an impact, or rather can actually show results or holds true with respect to the IT sector as well, because it's TCS which has disappointed on the earnings front, where in a constant currency number, the overall revenue has declined by 3.3% on a sequential basis, and even the management commentary is not that great, though they have maintained their FY26 outlook for the international business, which is expected to be better than what they have experienced in FY25. But on terms of the spending and in terms of the segmental performance, nothing great on those front. Nikunj, what's your take on TCS? And good to believe that TCS can have implications on the other IT majors as well?
You know, there used to be a time when Infosys would catch a flu and rest of the market would sneeze, right? But that is changing. Why? Because individual companies are now adopting very differently. So first, to your point, that look at the model of HCL, compare that with TCS, very different. Look at the model of what Accenture is doing, compare that with the Coforge, very different. So it's no longer that same symmetry what you will get in numbers. Specifically to TCS, there is one is numbers and second is positioning. They both are different. Now the positioning of the stock is that positioning was thanda. Nobody anticipated anything. Nobody was expecting anything. Stock's been flat and it's been hugging onto a flat line. Do these numbers have it enough for the stock to really take a leapfrog jump? The answer to that is no. Can it inch higher because of technical factors? Well, it may inch higher. But at higher level, I don't think there is going to be institutional appetite for TCS. Why? Because for IT, I think markets are pretty much convinced that the big picture is a sector which is struggling to grow at 10% also. And if a sector which is struggling to grow at 10% also, where valuations in case of TCS are north of 20, so then price versus value discomfort, I think, seems to be there. The fact that, I mean, you have to look at, you know, TCS, Shishti does not give a commentary. So then how do you judge the numbers? You look at what the guidance is, which is for manpower hiring, wage hike. What are they saying in terms of where margins are likely to move? What are they saying in terms of the quality of order book? On all that account, while they are not contracting. So the business is not contracting, but I don't see they are at the turn where you could say the cycle has started again. So you buy IT when you know a cycle is turning. Like COVID, post-COVID, the cycle turned for digital. Post-AI, the cycle came down. I don't think there is early evidence based on TCS or what we heard from Accenture that the cycle is turning. We are more for the same. Buybacks and dividends will save these stocks from a free fall. And that's about it. The purist would say that it is cheap, but I would say that there are better options when you're buying companies at P multiples of 20 plus with a 7-8% growth. There are a lot of other stocks in the market, and I think that is where I think the flip is happening.
All right, so that's the take coming in on the TCS front. Well, of course, the management did highlight there is increased delays in the client decision making and discretionary investments as well.